Welcome back to Commercial Real Estate Today. Grateful that you are with us. You know, one of the essential things in commercial real estate is the flow of money. And not just the flow of money from the lender to the seller, but the flow of money in and through the business. Because if there's no business, there's no ability to make a lease payment. There's no ability to make a mortgage payment. We have a true expert here with us today, a good friend of mine, Bethany McClellan from Rapid Business Plans, to share with us the importance of those business plans and specifically how we use those plans to secure funding. Not only SBA funding, but potentially second round PPP funding and other sources of funding and acceptance of the business that you're looking to locate into the building that you're looking to lease or sell. Bethany, welcome to the program.
Hi, Wally.
So let's go pre-COVID for a minute. The SBA, Small Business Administration, probably the primary business funding source in America. How is it that business planning became such an important feature of securing SBA funding?
Well, we could get into some of the requirements of the SBA where there's a compliance issue, but every loan has a package. The same holds true for SBA. And in that package for an SBA loan, you have to have a business plan for most types of SBA loans. So if you have a startup or if you have a property purchase or an acquisition, partner buyout, refinance, or if you're trying to expand your business by opening a new product line, you'll need a business plan for those things.
Gotcha. So if I am a startup, we'll start with startups. If I'm a startup and I'm working with my commercial lender, I'm working with my commercial real estate agent, and who knows what other commercial players I need in that mix, and I suddenly discover I need a business plan, why can't I go to the lender, go to the agent, or go elsewhere, as opposed to a specialist in writing SBA business plans?
Well, the bank will possibly give you a template. There are also free resources like SCORE and also the SBDC that will guide you along and give you feedback. Those things can take some time. We find that a lot of business owners are the type of person that owns a business is going to be a person that's in a hurry, a type A kind of person, and they want to get things done quickly. And then some of your more savvy business owners will know too that outsourcing is a really good tool. And so we happen to be a resource for folks. We can help them turn their business plan around in just a few days so that they can get on with their lives and get their loan closed. And
a few days. So I spend a few dollars to be complete in a few days rather than have that sitting on my desk as a to-do. Yeah. And weeks or months later, I do it poorly and I'm frustrated that I've slowed my loan or worst case denial of the loan.
Sure. And, you know, sometimes a business owner will attempt their own business plan and they'll submit it to the package. And I've talked to lenders over and over again, and they say you just can't unsee it. If there's an unpreparedness element to that business plan when they submit it to the bank the first time, it's something that the banker can't forget about or that the credit team can't forget about. And so really being prepared when you go in there with a polished package is useful.
That's an interesting point. You don't get a second chance to make a first impression. And if your business plan, when it's submitted to that lender or that investor, is saying, I'm unpolished, I'm incomplete, I have obvious holes, you got a good chance of a no. And when you come back and say, well, am I pretty now? It's a little bit too late. That's a really interesting point.
Sure. You could be the best concrete guy in town, but if you're trying to get an expansion to buy 4 more trucks and then your business plan is not on point, you can have some problems.
Your thoughts bring to my mind the importance of having that plan be super crisp from the beginning, because the people who are reviewing it and deciding, will I invest, will I lend money, they read these every day.
Sure, yes.
And they can sort a good from a bad plan near instantly, even with no industry-specific knowledge. Is the plan clear, complete, correct, and consistent? Yes or no, and that's your particular role. I really like that. 2 to 3 days.
Well, let's call it 3 to 4 days. We've gotten a little busy lately, but we have a couple elements to the business plan, the financial projections. So for an SBA startup, for example, you would need 36 months of monthly profit and loss and cash flow projections, plus 3 years of balance sheet projections. And so that's the financial projection element of it. And then you want to have written assumptions that describe how you arrived at those numbers. And then the first portion of it is going to come in front of the financial projections with your executive summary, notes about the market demographics, demographics, and then also for SBA, you really want to be strong on the background of the business owner, how their previous experience is going to relate to the endeavor going forward. We also include, in all of our business plans now, we include a COVID statement because the lender is going to want to know, how did COVID affect your industry or your business before? How do we expect it to affect it now? And if there's a public-facing element of it too, we want to include some notes about the sanitization procedures.
Good point. Good point. It's knowing what needs to be into that plan. So you've done dozens, hundreds of business plans at this point. What is the usual, I won't call it failure point, stumbling block? So I've got my startup ready or my expansion plan ready. I want to go to the SBA to get this baby funded. What is the most common shortcoming that a business owner brings to you? What are people usually not prepared to provide?
Well, I think what is one of the elements that people don't consider, if you're kind of a novice at writing business plans, is the written assumptions that really talk about how you arrived at those numbers. And the SBA is going to want to see some detail on it. They're going to want to know, where is your revenue coming from, and what are those assumptions based on? Like, what is your average job size, and how many jobs do you expect to have, and what is that length of ramp up period before you get to your operating capacity? And then they also want to hear a written description about how your direct costs are arrived at, and then also your expenses, or in other words, your overhead.
So it's being specific is really what it comes down to. Being specific in your projections and having assumptions that would reasonably support that projection. So
Correct,
you're looking
correct.
to do. I talked to a lot of commercial contractors in the context of the show, and I said, "What's the sweet spot for your business?" "We can do anything for anybody." And I'm like, wow, that just universally turns off everyone. What size projects, what industries? Is it new build-outs? Is it renovation build-outs?
And what is your footprint? Yes,
exactly.
the geographic footprint
the
as well.
geography.
Yeah.
Who is your avatar, your core customer? So I think in what you're doing is essentially the same thing, saying, let's get specific so we can gain trust and earn funding. I like that. You mentioned the COVID. Many of us have been involved in the PPP, Payroll Protection Plan, as well as the EIDL loans. Specifically to the EIDL, which is an SBA product, how have you helped business owners through your planning and application process to maximize the dollar that they got? After you share that with them, I'm going to ask you, what is the best way to prepare for round two?
Sure. So the SBA EIDL program has been around for, a couple decades at this point. It's been an element of the SBA program for a long time. And so in the event of any disaster, like a hurricane, a tornado, a flood, the federal government will declare an area a disaster area, and then the SBA opens up funds for folks to support their business in this time when it might be down. And those funds usually are up to $2 million, but it was truncated for the particular coronavirus pandemic disaster to $150,000. After a certain point, it was, limited at that much. But we've been able to help our clients, kind of depending on their financials, because the SBA does want to see support on that. We've been able to get them $150,000 for the first round, and then another $150,000 for that second round. And the terms on those loans are 12 months of no payments, and then 3.75% for 30 years. So it's really, spread out for affordability. But that second round, we help folks do what's called a reconsideration. And so this is a process that's kind of, obscure. You really have to do some searching on the internet to figure out how to do it. But we help our clients navigate that. We have some key relationships with the SBA that help us escalate things when we need to.
So to get that second round for reconsideration, to have a high probability of success, is it familiarity and relationship within the SBA, or is it familiarity and relationship with a specific lender? How does that usually play out?
Well, the EIDL goes directly through the SBA, and so we do have those key relationships with the kind of hierarchy at the SBA in order to get some of those pushed through. But really, anybody that has gotten their first EIDL disaster loan will have a very good chance of getting that second round of funding, but it's really navigating some of the red tape to really accomplish it. So even folks who have been rejected for that first or second round, we're able to help folks appeal. And you can actually appeal twice. You have 2 opportunities to appeal, and we can help folks, reposition themselves.
And you've got the staff and skill set to do that appeal process also.
We do. I have
That's
one of my
interesting.
staff, a woman named Michelle Claudio, who's the expert on all this.
I actually know her. That's interesting.
Cool.
Yeah, and we know her together.
That's right. That's
from,
right. Yeah.
From a previous business organization. That's right. Yeah, very good. Friends everywhere. It's a beautiful thing at Commercial Real Estate Today. That's why we have these conversations. So let's go to that second round or appeal process for that SBA EIDL loan. You said something that's really interesting that I was aware of, but I don't think many folks are. It's not a new program. It's
Correct.
been an SBA disaster relief program for a long, long time. It's suddenly, there's an awareness that we have, and I'm sure they've received things in record volume that they never perceived, but nonetheless, it was an existing program. It was not invented for COVID, and I think that should give people comfort. And I would assume that's the same with the second round potential,
Yes,
as well as the appellate process.
It has been built into the program. Yes.
Let me ask you some specifics on that second round and or appeal process. When folks made their initial, which basically everyone who was going to do it has done their initial by now, they did the initial. It was based on very particular numbers of employees, very particular payroll. Here we are, 10 months, nearly a year after this was first introduced, and many businesses have changed. Some have gotten larger, some have gotten smaller, some have gotten different, yet they are the same entity. If I've gone from 10 people to 20 people, or if I've gone from 20 people to 10 people, does that reapplication or appeal reflect in that submission where we are at the time of application or at the time of either initial loan?
Well, that's really immaterial, and I just want to emphasize here that the payroll and the employee numbers was really an element of the PPP program and really keeping people paid, which is separate from the EIDL program. The EIDL program, if you have a business that was a going concern prior to that disaster and then during that disaster, and you don't have any of the automatic disqualifications from an SBA package, then you're virtually guaranteed to get some funding from that, or even a lot of funding. In the case of other disasters other than coronavirus, up to $2 million. But I'd love it if I could tell you the reasons why SBA loans are automatically declined, whether a disaster loan
That
or,
would be very helpful to me and to thousands of others.
Sure. So we really don't suggest people hire us if they have any issues such as credit below 640, if there have been any arrests in the last 6 months, if there have been any felonies in the last 7 years. Bankruptcies, they kind of frown upon, but if there's a good reason like divorce or medical illness or something like that, they'll forgive it. But also, one of the other automatic denials for an SBA loan is for a previous default on a government loan, such as FHA, VA, federal student loan, or another SBA loan.
That's interesting. You know, I can understand completely why a lender, in this case the SBA, would not want to deal with a person who had those challenges. And those are the people who have the greatest need. It's very interesting. That happens in many things that relate to credit and lending, but
Sure.
it is a dichotomy. But it's good to know right up front, hey, I'm not eligible, and these are the reasons, and move on to the next thing. Knowing you've got strong expertise and experience in SBA, where would you send a person, or is there a second tier? So in residential lending, there's always the subprime market. What are the alternatives to the person who has a clear reason that they're going to be denied by the SBA, who's seeking alternate funding, and how can you help there?
Well, there are actually, so those guidelines are reasons why an SBA loan, particularly an EIDL loan, would be automatically rejected. But there are actual SBA lenders that will work with some of those credit challenge situations. And, those are more expensive. You're right. It is a subprime sort of situation. So it's more expensive to do it that way, but it can be done. Now, there are other sources of funding, too. We work with a company called the Funding Group. They're based out of Orange Park, but they help folks all over the country get business funding. Now, that's based on personal credit. That's going to be, you want to have credit about 700, but you don't have to get a business loan or have it secured. It's totally unsecured funding. And then
it's unsecured, or it's personally guaranteed?
It's totally unsecured. It's based on the person's personal credit and their ability to prove income, or it could be household income if there's a spouse. And so they're able to get folks on a smaller denomination, like between 10,000 and 250,000. In fact, I worked with a funding group to help get my brother a couple $100,000 to start his business about a year ago.
And do these sources apply to property acquisition for the business as well as equipment and operating expense?
It doesn't matter what you use that money for with the funding group. It's just an alternative commercial finance sort of situation. Mm-hmm. And so their key expertise is in understanding which combination of banking product and banks will be able to put together this amount that they think that they can get for you, again, between 10,000 and 250,000. And then they just drop it all into one account.
Excellent. I like that a lot.
Sure. And then there are other alternatives too. We work with folks that do factoring and asset-based lending. And so those are not as much credit-based. It's not based on the borrower's credit. It's more based on the creditor's credit because they finance receivables. So, for instance, we work with a company based out of San Francisco, and they supply some concession products to like Disney and other things that are sold inside of like Ross department stores and things like that. But they had some receivables because Disney's kind of having a hard time. But because Disney's such a good payer, they're just not going to pay until next year. They're able to factor some of those receivables.
They're such a good payer, they just don't pay for a year. I look at my own business and I go, a good payer is a payer that pays now.
Correct, you're
but
right.
I understand
yes,
there are many variables that come into that. But being predominantly in the commercial building inspection business, there's no 1 year that plays out. And I'm always empathetic for people who have that 30 days is not so bad, but 90 days or 360 days, like, my gracious, it's
painful.
That's a big float. You have a multi-billion-dollar company like Disney having their debt floated by businesses that are often quite small.
Yeah,
you got to recognize that going in. Sometimes winning a contract is the beginning of the slide to zero cash flow, even though it's going to come.
Well, and recognizing too that you're going to lose a few points, maybe quite a few points when you're doing factoring or something like that, and building it into pricing for a bid or something like that. So.
I think it's important to point out, for me to point out, that there's a dramatic difference between going to a business planning professional who is essentially making a literary document out of your fantasy.
Sure.
That has no value. What I enjoy that you bring to the table is the plan has an express purpose, and that is funding the fantasy and understanding how to develop the plan, what to emphasize in the plan to get the funding, often from multiple sources, not exclusively SBA, so that the fantasy becomes reality that's solvent. Nothing's worse than a business plan that you can't fund.
Right. And so these are some of the measures that we take. We have a checklist of things that we go through in order to make sure that the business plan is ready to go to the client and then therefore ready to go to the bank. And part of it is looking at that cash flow. I mean, we make these realistic assumptions and put them into the plan, and then we just make the assumptions. We don't have the profitability first and then work back into pricing. We say, what is the pricing for this market, and what are the expenses for this particular business, and what can we expect the direct cost to be? And then we see if it cash flows, and then we see where the problem is if it doesn't cash flow.
I got that. An interesting area of business is foreign nationals coming to the U.S. to build businesses.
Sure.
Share with me about some of the programs that you're able to plan for and seek funding for that bring foreign investment, foreign nationals into America to invest in America, specifically things like EB5, E2, L1. What are these programs collectively, and how do you help get those funded?
Sure. Just a general overview, because I am not an expert on that at all, but those programs are intended for folks to immigrate legally to America and to open businesses as the purpose of that immigration. And so you do have to have business plans as part of that immigration attorney's package for you in order to come here. But the main point of those business plans, what sets it apart from other business plans that we have, is that the cash flow of the business needs to support not only the operations of that business, but the personal expenses of that immigrant for the first 2 years of the business. That's the key formula for that one.
I was involved several years ago this was in Palm Coast, Florida, Russian immigrant who had some means came to Palm Coast during it was really prior to the previous real estate crash is when it was, when things were going like crazy. And he would build homes in Palm Coast specifically for Russian immigrants to turn into rental portfolios.
Smart.
So he was using these programs to facilitate essentially selling homes in these programs to other immigrants. His specific target was Russian. That was his background. But it could have dropped any immigrant from anywhere in the world into this who was able to qualify and fund it. It was a gold mine of opportunities. Very, very interesting. You know, you mentioned working with real estate or immigration attorneys. There's not a lot of folks that would jump up and say, you know, I see how a business planner, specifically an SBA business planner, supports an immigration attorney. But it's clear that it does. It doesn't fit for every model,
Sure.
but certainly those looking for placing immigrants of means and business builders who are immigrants, it fits very, very well into that mold and model. Talk to me about how what you do in the business planning, funding preparation world is supportive of commercial lenders. How can you be a tool in the tool belt to the commercial lender?
Well, we are able to help folks put a polish on the package that they submit for underwriting in order to get approved for the loan. So we have expert writers on our staff. In fact, one of them is my husband. And we also have, a finance expert that's making the financial projections and putting it all together. And then the other thing that we do too, included with every business plan package that we have, whether the borrower takes us up on it or not, is we include coaching prior to the borrower's interview with the bank so that they're really prepped on what's inside of the business plan so that when they have a conversation with the bank, they're really able to speak intelligently about what their plan is.
So that commercial loan officer gets to present a plan with a high probability of surviving underwriting, which is everyone's goal in the mix.
Correct.
The commercial loan officer doesn't want to submit a loser.
Right.
The investor/client doesn't want to submit a loser. Nobody wants that. So it's optimizing truth as best we're able to get to the other end.
Right. And Wally, one thing I want to emphasize too is that, we have relationships with just a small fraction of the number of SBA lenders in the country. But that is to say we have relationships with over 800 of them, and they all do something a little bit different. And I think where some folks get into trouble is when they start, maybe they go to, the place where they've been banking for 30 years, but they don't really have a robust SBA department. And all these deals, the lenders that I speak to call SBA deals hairy, whether they're more hairy or less hairy, is kind of a matter of the elements of that particular deal. And so really understanding, in fact, we just started working with a gentleman that's purchasing a piece of property to build a childcare. He and his wife are going to build a childcare place. And there's one particular lender that I work with that really their credit appetite is more for non-branded, non-franchise daycares. And then I also in the same week spoke to another lender who specifically does like the branded franchise daycares. And so and they're national lenders, both of them. And so really, I wish there were a database somewhere where you could just really understand who does what, but the credit boxes change all the time, kind of depending on what's on the balance sheet. But, I think a person can save themselves a lot of time and headache by, really just being informed about what kind of lender does
it's
what.
Presenting the right loan to the right lender. On the residential side, we see that often with the FHA 203K loan, which is a purchase and renovation loan rolled into one. It's a fantastic product and opportunity. If there are 1,000 loan officers within 100 miles of the studio, there are less than 5, I can name 3, who have expertise to get the deal done.
Fascinating.
So anyone can take the application, but getting the application to the finish line is very different. What I hear you saying, it's exactly the same thing, depending on the financials, depending on the industry, depending on all the variables that go into that plan. The plan can be perfect, and if it doesn't fit a specific lender's hole, that round peg in a square hole is not working. There was nothing wrong with the plan. There's nothing wrong with the lender. It just isn't the right fit.
Correct.
Gotcha. So answer me this. Looking at your front door at Rapid Business Plans, who typically comes in the front door? Is it usually that business owner, Or is it usually the immigration attorney, the commercial lender, the commercial real estate agent saying, hey, I've got this deal, I've got this customer, will you polish this so it can perform? What's the bulk of the business?
I will say we mostly are introduced to borrowers through our referral partners, through, or, the immigrants as well, through immigration attorneys, through lenders, also CPAs and business attorneys and other centers of influence that we work with.
Yeah, that feels more comfortable, very candidly, where the invitation is professional to professional. And not to say you couldn't take a direct referral from a business owner.
And we do. We get referrals from our website as well. So.
Yeah, but if it comes directly from the lender, directly from the real estate broker, it's already a team in motion.
Correct.
It's a lot friendlier.
Yes.
Yeah. How do you get a commercial lender or a commercial real estate agent, for that matter, how do you get them comfortable with the idea that you can carry that deal to fruition as a team member?
Well,
it's all about trust, right?
Sure. We send them a sample business plan, and then they're like, wow, this looks pretty good. I would love to see something similar.
For folks who'd like to have their own conversation with you, be they commercial lenders, commercial loan officers, insurers, investors, I know it's a broad medley of people who see value. What's the best way to get a hold of you and begin that initial consultation?
Sure. Well, folks are able to see a lot about us on rapidbusinessplans.com and reach out to us on our contact page there.
Excellent. Rapidbusinessplans.com. Bethany, it's always a pleasure to sit with you. Each time I sit with you, I learn something I did not previously know, and that's the joy of continued relationship and conversation. Thank you so much.
Thank you, Wally.